Back to closing trades right here on ET now, and still quiet. It seems like that's how we're going to finish off the year. But, well, it's not done. I think we're the only world market, Anisha, which is going to be trading tomorrow. Or is there some other unfortunate one?
I'm sure there are some other unfortunate casualties as well. But definitely, I think from the top 10, I think we will be the only ones who would be probably working
So
tomorrow.
my next question is, what is it that you're going to be doing to bring in the new year?
Sleeping in, because we have to be here at 8 a.m., both you and me.
Yeah, absolutely. But just in case you want to stretch a little bit more, there are a couple of movie and OTT options as well, which you can go to in case you don't want to step out this evening. There's Pushpa 2, there's Mufasa, there's Marco, Max, Frozen. And then, of course, there are a lot of shows to binge watch as well. So there's Lincoln Lawyer, there's Mismatch 3, Amaran, there's Lucky Bhaskar, and then, of course, Squid Games 2. Anisha, I know that I'm going to be binging Squid Games. What about you?
I think I'll watch Home Alone. It's like my classic movie to watch out for any of the holidays. So probably that, or the other one, that kid one that we were, Baby's Day Out.
Baby's Day Out.
Yeah, that's just one classic that I can watch anytime. So I think I'm going to pick on either of the two.
So the inner child you wants to be left alone at home, basically.
Yes, yeah. I guess that's the calling that I'm trying to get through with that. But for our guests on boards, let's understand what their plans are for the new year. Mayuresh Joshi also joins us, and Avni and Naresh were with us. Naresh, you don't seem like a big party person, or am I incorrect? What are your plans for the New Year's Eve?
So it just remains the same. You party a day before.
Oh, a party a day before. That's a smart decision. Avni, Mayuresh, what about you? Avni, you go first.
Yeah, so there's a house party at my place. All of you all are invited. You can join me.
That's so kind, but I think we're just going to kind of excuse ourselves given the work day tomorrow. Mayuresh, are you taking the day off tomorrow at least?
No. So I am going out for a party. So we are going out to a hotel for a party in the night. Our work starts at 8 in the morning.
Wow, Anisha, seems like you and I are the most boring of the lot. It's Baby's Day Out for you and Squid Games for me. But Mayuresh, what's the year ahead looking like? Is it seeming like anything close to a party, or do you think it's going to be a more somber one?
No, so I think it will be a party with a lot of fireworks, Aisha, to be honest. So you never know what's going to happen, right? When Trump resumes office, the kind of tweets that you're initially seeing come through. What he probably imposes in terms of tariffs or otherwise is going to keep markets on their toes. Obviously, to effect or to visualize something which can create a huge value differentiator that everything probably moves to the US seems to be very, very improbable. But I think all the rhetorics that he might keep markets on track. The second is obviously Aisha's earnings, and earnings have been soft. There is no two ways about it. Whether you're talking about consumption, the trends thereof, are clearly indicating that earnings slowdown is probably here to stay at least for the next couple of quarters. Obviously, with better monsoons that we've seen, a better Rabi crop that you might probably witness, food inflation might stay in control. Rural discretionary might start coming back as we end Q3 and Q4. But to a large extent, I think earnings might remain soft in the Indian context. Having said that, what probably comes out of the budget is something that the street will also look forward for. I think a lot of expectations are now getting built in, specifically for the middle income groups in terms of tax cuts. And therefore, I think budget will be a closely monitored event, specifically in terms of capital allocation and anything in terms of tax reforms that probably come through, which might give a lot of impetus for the markets as well. Again, I think markets expect it to remain volatile, at least in the first quarter of the next calendar year, Aisha. But if earnings show signs of improvement as we head into Q4 and Q1 of the next financial year, you might see some respite going forward. But I think the first quarter is going to be very, very volatile as far as the markets are concerned.
So that's the take coming in. Fireworks is what we're waiting for in 2025. Just counting down to the end of the year, and it's going to be last 20 minutes of the trading session. And so far, it's turned out to be okay. From the lows of the trading session, we have recovered quite a bit 23,650. Of course, materially off the year highs. 26,000, remember, was the record high that we touched this year. But from there, of course, we have toppled almost 2,500 points thereabouts. Bank Nifty just around the flat line. But you know what, Mayuresh, 2 years on the trot, Bank Nifty has been underperforming the frontline index. Do you think that 2025 will be the year where financials will lead the charge, or do you anticipate perhaps another year of a soft performance from banking majors and financials?
Afternoon, Anisha. No, I think BFSI should do well in 2025. I think 2, 3 factors. One, I think valuations in their favor. Second, I think as we see it in markets with India, they're making very nice bases. So I think the earnings are very, very supportive. The price action is supportive. The institution holding is going up in terms of ownership patterns. And therefore, most parameters of cancelling that we probably look at is getting fulfilled. Now, deposits was obviously the sore and the pain point that the street probably feared. But last month, deposit growth has outpaced credit growth. If the market volatility continues, I think the kind of rationale that the markets were penciling in of huge outflows coming in from bank deposits to the markets probably might seem to be a case which probably might not play out. And therefore, with expectations of credit deposit ratios remaining stable, with the RBI regulators crackdown in terms of unsecured loans, personal loans, etc., I think a lot more in terms of the risk-weighted assets to overall assets are in control of the bank. Asset quality pressures have obviously come off. And therefore, I think from both these aspects, BFSI probably seems to be well placed. Again, banks with a strong liability franchise might do well. So I think ICICI Bank, one of the larger names, Federal Bank, Karur Vysya Bank. Karur Vysya Bank has posted, I think, a brilliant set of numbers in Q2. I think if they continue doing that, I think a bunch of these banks might continue doing well as we head into Q3, Q4. Just as an extension of BFSI, Anisha, just to conclude my point, a few of the housing finance companies, stroke NBFCs, which are having leadership status, might actually also do well. PNB Housing, as a case in point, foraying into the emerging and affordable segment, they've got a good control in terms of the risk metrics, the credit underwriting that they're probably doing, and therefore higher yields through the segment with lesser asset quality pressures. That probably gets played out. I think this is one stock that can do well in 2025 as well.
Okay. It's quite interesting, Mayuresh, that you listed out all those banks because the RBI's macro stability report doesn't seem to be hinting all's well for banks for sure.
No, point taken. So again, I think what is largely transpiring is how the balance sheet growth will probably take place. You're seeing some signs in terms of some asset quality pressures actually being built in. But it's again all about credit underwriting. It's all about how you are probably ensuring that the kind of advances that you're probably giving has either been collateralized or has a sufficient credit underwriting score that you're probably doing. And therefore, I think the slippages ratios for a few of these banks might actually turn out to be better than the rest of the pack. So I'm not saying that the entire space will probably do well. There will be a few banks, as we've seen in 24, might be laggards in terms of their financial performance based on a whole host of these parameters. But a few of the banks will probably do this and do this well, can actually ride the trend in terms of the growth dynamics that the sector probably has to offer. So again, I think as private capex might pick up, there is significant amount of government capex in the system. A few of these banks, if they are able to deliver well and execute well, I think numbers can actually play out effectively and positively.
That's the latest coming in. But since we are on the subject of banks, hear out what Rahul Malani had to say about his top recommendations for 2025 from the banking pack.
You do not see stress peaking out at least in the next 6 months. First sign of stress peaking would be seen in the DPD 0 plus, where the collection efficiency will start to improve. That will be the time that we should see accumulating the stocks like more major SMBs and other lenders, as well as the NBFC MFIs which have been broken down by the market. Like ICICI Bank and HDFC Bank. In mid-tier private banks, we like Federal Bank, and in PSU bank space, we like SBI and BOB. Given there will be stability in the return ratio as well as the growth will be if we rest aside HDFC Bank, the growth will be at par or greater than the system growth.
Okay, that's a take coming in on banks and what the macro stability report could actually, indicate or have in store for them. Closing in absolutely flat for the year.
Okay, so that's about quick commerce, one of those big trends that we watched out for this year. And the other big trend, Mayuresh, of course, was the energy transition, which played out both in terms of, the power sector, power ancillaries, right from wires and cables to transformers and whatnot. And of course, the generators themselves and the solar cell manufacturers and the kind of IPOs that we saw. And the second one, of course, from the auto sector. First, let's put the spotlight on the power sector. This year marked the, debuts of a lot of these renewable energy companies at the bosses. What stood out to you in terms of stocks, and what do you think will be the way forward in 2025 for the sector?
So, Anish, I think the entire ecosystem did well. So, if you look probably at the transformer players, right, they had an astounding run in 2024. Whether you're talking about Voltam or whether you're talking about Drill, I think a fantastic set of numbers that these companies posted. And again, there is logic to the entire argument. Renewables expected to go from 180 gigawatts to 500 gigawatts. The expectations in terms of transformer capacity that we've got, which is around 225,000 MVA, is expected to add another 150,000 MVA over the next few years. So as these companies, specifically within the organized space, are expanding capacities, you can very well assume the kind of work that will probably come through as the entire transition probably happens. Similarly, in case of the transmission lines itself, so in terms of circuit kilometers expected to get added, both interstate as well as a national grid as well, you're expected to add around 200,000 circuit kilometers over the next few years. So I think power generators, power transmitters, EPC players, financiers, I think would continue doing well if the big picture argument of power over the next 5 years continues and the capital spent on power probably continues. One space between on this are the flue gas desulfurization equipment manufacturers. So you've got a couple of them, Alisha, which look very, very interesting. So why you've got Bale at one end and you've got Techno Electric at the other end. So within the space, I think I'll just concentrate a little bit more in terms of the EPC players. Within the EPC players, a player like Techno Electric, who probably has the FGD part, where there is a 1 lakh crore market, 10,000 crores orders have been given out. Large part of the order book still to be given out over the next few quarters, can be a big beneficiary. They're also into smart meters, data centers. Valuations are a bit expensive, but Techno Electric can do well. From a producer perspective, what Tata Power has laid out in terms of 2030 numbers, or what JSW Energy is probably doing at this juncture as well. Again, if they're able to execute well, and that reflects on numbers in terms of the growth that they'll probably achieve in the next few quarters, these power generators might also do well. And let's not forget the financiers, because to cover this entire ecosystem, you might need 200,000 to 250,000 lakh crores in terms of financing and funding that will probably come through. As rate cuts happen, their cost of borrowing probably comes down. A large part of their advanced pool will go to public utilities where asset quality defaults probably look minimal. And therefore, even the financiers, even though a little bit expensive at this juncture, might do well with better dividend yields as a play. So selectively, I think power as a theme, in my opinion, should continue doing well.
One part of the energy transition, the power generation side and the ancillaries. What about autos in that sense? Next year, we'll have more companies joining perhaps on the energy side. Ather IPO just got approved by SEBI this morning, and I'm sure a lot of others will also keep coming in. What do you make of the fortunes of, let's say, Ola Electric or M&M, etc., which were at the forefront of this EV transition earlier?
Sure about Ola, Anisha, because I think the numbers have to show up. So unless the numbers don't show up on balance sheet, very difficult to make a re-rating scenario for Ola. So if the numbers are a testimony to what they are probably expected to achieve in the next few years, the next few quarters hold key in terms of the re-rating of the stock. Within the core OEM basket, M&M has done exceptionally well. You probably saw that in the past few quarters, specifically the SUV part of the market, which held up pretty well. And even now, when you're probably speaking and talking about urban consumption trends going down, certain pockets which are higher end, those trends have probably not come down. Case in point for cars above 15 lakhs, 18 lakhs, you're probably not seeing the kind of slowdown seen in lesser price models. So M&M, I think through its diverse product mix that it probably has, the SUV portfolio, the expectation of more launches, the farm equipment part of the business expected to do well. And on an SOTP part as well, there are other subsidiaries expected to perform reasonably better in FY25, makes a base case scenario for M&M to probably continue a good show as far as earnings is concerned. But my take is OEMs might just struggle a tad bit because of the higher base, because of inventory, because of competition intensity. Auto ancillaries probably might do a tad bit better, in my opinion. So stocks like a Suprajit Engineering, as a case in point, we've probably got a few of the forging players that might do well. The expectation in terms of Class 8 truck market in US, Holden now expected to do better. A large part of the forging pool, including Forgings, you're probably looking at RK Forgings, getting more into fabrication and value-add services, which means that the overall margin profile should probably improve. And with an burgeoning order book and better execution, my sense is that forging players might have a better 2025 as well. So I think focus a little bit more in terms of auto ads.
That's the call on coming in on some of the movers. For the year, of course, we're closing in absolutely flat. It's actually Hoodco. 3.5% of a spike up is what you're seeing, and that's your top performer today. Other than that, there's, of course, Adani Green, a 3.5% of an uptick. IRB is holding out well. It's a very unusual set of movers. Typically, you don't see these names. Kotak Bank has made a dash of about almost 2.5%. ONGC is looking good by about 2.5% or so. And, of course, BEL, Trent, and ITC, they continue to hold out well as well. But Naresh, in terms of a trend and sectorally at that, what do you think is going to lead, say, in the next month or so?
So in terms of leadership going forward, currently it is pharma which is continuing to lead. But going forward, it could be banks which could really make a comeback. So out here, the returns have been, say, relatively lower to Nifty for the last 4 years. Post-COVID, there has been a shift. And that could eventually change. So banks as such, so you have HDFC Bank where the 4-year return is 0. Many other names. So banks currently are the most well-placed in terms of leadership. Jan could be a month of that. And there could be a bounce back in oil and gas.
Let's wait for that bounce back, whether that happens or not. But just last 5 to 10 minutes of the trading session, and trust me, we are counting down to that. And come tomorrow, of course, it'll be the new year, but we'll also get the auto sales data. So let me toss it across to Shrishti to get more details as to what we should expect from the auto companies with respect to the sales in December. Shrishti?
We are expecting minor green shoots across the segments, and the major factor is the heavy discounts that specifically these passenger vehicle companies have come out with. Yes, indeed, their clear focus was to get away with the year-end inventory, but on the flip side, consumers are also taking note that going ahead in 2025 from the January month itself, the price hikes will be applicable. So keeping in lieu of that, the purchases were quite decent in the passenger vehicle segment. We can also call the same in the tractor division as well, but the two-wheeler segment, select companies have done well, and on the back of the low base, the CV segment is expected to perform better. So that's the big trend that we are watching out for and expectations on that line. But let's talk numbers then from the passenger vehicle segment. It's Maruti Suzuki that could be leading it from the front, because on a YY basis, we are expecting a jump of 14%. But for M&M Automotive Division, though the company has a lot of the high waiting periods for some of those products, so not much discounts being offered by M&M all in all, but for their automotive division, still a 13% growth is what the company could report. Other than that, Hyundai Motors were actually giving the most of the discount in this particular segment, but quite a tepid growth on a YOY basis. And lastly, from the Tata Motors passenger vehicle segment, not much expectations there. If we come to the commercial vehicle segment, then yes, indeed, on the back of a low base of the MHCV segment specifically, we could see a good jump on a month-on-month basis from the likes of Eicher Motors, VECV, Ashok Leyland, as well as Tata Motors. All of them are expected to show a growth of 15 to 39% on a month-on-month basis. But let's talk in the two-wheeler category, then TVS Motors as well as Eicher Motors. These are the two companies who could actually report a double-digit growth on a YY basis, while for Bajaj Auto, it could be a just 8% growth, but for Hero MotoCorp, that could actually be a decline of 3% on a YY basis, and on a month-on-month, the company could be in for a 17% dip. So clear winners and losers in the two-wheeler category is what our expectation is. And lastly, from the tractor division, the on-ground farmer sentiment is holding up quite strongly, and in that fact, M&M tractor division is expected to do fairly better, where we are expecting a growth of 14% on a YY basis. What we can say is that minor green shoots are indeed visible in the auto sector space and across the segments as well.
Right. Mayuresh, I know we talked about Ola, but other than that, what is it that you're anticipating the month of December is going to hold out for auto sales? And do you sense a pickup coming in?
So might be tough, as Shrishti was just mentioning. I think leaving aside a few two-wheelers, I think TVS is expected to post a decent set because of their product mix. The EV mobility launches that they've probably done are getting well accepted into the market, and they're also entrenching more in terms of their distribution reach as far as the rest of the market or non-south markets are concerned. So I think out of the two-wheeler pack, TVS is one which might actually stand out as far as December numbers are concerned. From the four-wheeler PV stroke tractor space, again, as I said, M&M probably might have a tad bit of a better show compared to the rest of them.
Point taken. So that's a latest coming in as far as the auto sector is concerned. But counting down to the last trading session of the year, just 2.5 minutes left for us. And then it will be the brand new year 2025, and hopefully it will be less volatile than what we saw this year, because this year was marked by a lot of election action. We saw the entire 70 economies plus actually went through election back in India as well. NDA 3.0 did come to power, but not with that kind of majority that we were expecting. And then of course in US, Donald Trump came to power, and in UK, Mr. Rishi Sunak was ousted from Downing Street. So all of those political events did have ramifications back home in India as well. And the geopolitical tensions, whether it was Ukraine, Russia, that continued, or the Middle East skirmishes, all of that led to the fact that there was a lot of volatility in commodities as well. And that's the reason gold was one of the best performing assets this year. Gold was up, I think, 35% this year. So definitely a year that was very volatile. And I think it's the mother market that also, clinched the deal with the kind of outperformance it showed, Aisha. I think 30% plus on the NASDAQ, and India with that 10% gain pales in comparison.
Well, absolutely. And I think that's been the biggest bone of contention, right? The kind of dollar rally that you've seen, and that's really impacted the FII flows. I mean, not to say that India is dependent on FII flows for sure, but definitely a little bit of an extra push could have lent a helping hand at least. But closing in absolutely flat for the year, very unlike how the rest of the year has been, and we will flag off how the year-to-date performance for the indexes have been. The Nifty Bank as well today, we're closing in absolutely flat. The big damage has really been done by the IT sector today. Look at the kind of losses that you've seen on IT, and mind you, this is for a second consecutive day on the trot. Techem, Infosys, TCS, Wipro, they've all fallen quite a fair bit. In fact, ICICI Bank standalone also has contributed quite a fair bit to today's fall. It's standalone itself fallen about almost 1%, 1283 is where it's shutting shop for the day. HDFC Bank, Axis, they've all been laggards today. Of course, Kotak held out quite smartly. There was BEL, Trend, some of the star performers of the year gone by. They continue their uptick as well. And then I want to see what L&T is up to specifically. That managed to put on a good show today, about a 1% uptick at that. Tata Motors ahead of the monthly auto sales numbers. That's going in strong into the numbers. I want to see what M&M is up to. M&M again has been one of the top performers from within the auto pack through the year gone by. But right now it's closing in absolutely flat, just about marginally in the green. But that's pretty much it on this edition of Closing Trades. Mayuresh, Naresh, both of you, thank you as always for joining in. And for all of our viewers, here's wishing you a very happy and prosperous 2025. But we'll be back tomorrow morning.
Yes, we'll be back at 8 a.m. So stay ready for the first trading session of 2025 with us right here on ET Now.
If you like this video, then like, share and subscribe to ET Now.